All right, gang. This hopefully looks somewhat familiar to you. We've taken a look at this when we actually did the chapter. What we're going to do is look at the big picture, just so we have an understanding of where we're going to go in all of the other lectures. But what our chapter that we're focused in on in this particular session today is going to be down here at the bottom. We're looking at the final report and what we issue. But it doesn't hurt to have an understanding of all the work that will be done from 40,000 feet above. And then when we get to chapter 2, 3, 4, 5, 6, etc., then this stuff will fill in. But we just want to have a fundamental understanding of it so we understand how the audit report is impacted. So let's begin. Let's start by taking a look at this particular area and having a fundamental understanding of how the decision tree works. And what we're doing here is we're going to start out with the basics. And it is the basics. Remember, we're going to learn more about this as we get into other chapters. We're looking at some general principles. What are the overall objectives of the engagement? Are we going to be able to have the proper amount of documentation? Will we be able to appropriately communicate and have an understanding with the client? And what about our own firm quality control? Will we be able to have the qualifications to do the work? Will we be able to verify that people are independent in this particular case, etc.? So we're going to look at each one of those. We then look at engagement acceptance. Does the client have the ethics to be associated with them? We never want to be associated with false, fraudulent, deceptive, or misleading information. And then we have to make sure that we are going to be able to be independent of this client. We're going to have to look at all the members of the engagement team, others who have the influence of it in the office, etc., to make sure that they meet those independent standards. And then, of course, we'll look at the terms of the engagement. Are they asking for an audit? Are they asking for a review? Are they asking for a compilation? What are they asking for? Is it only one financial statement that they want us to audit? Is it only one or two accounts? By the way, are they using full accrual GAAP? Are they using the cash method? So we want to have that kind of understanding, and that should be documented in the engagement letter. The next item, once we've accepted the engagement, we have to plan the audit. This would include what audit strategy, who's going to be assigned to it, etc. What is the level of materiality? We're then going to do our risk assessment procedures. Does the system of internal control lend itself to the comfort level that we need? Do we think that they are able to capture information appropriately? And do they have a system of internal control that either prevents or detects and corrects any misstatements? And even if they have that system, is it present and is it functioning properly? So we want to understand that system, and we want to understand the environment in which the company operates. We also want to understand their internal control and document that any way that we can find it, whether it's a flow chart, an internal control questionnaire, a narrative, or a decision tree. And then we want to identify those areas of strengths that we may want to rely upon and those areas of weakness where we're going to have to certainly roll up our sleeves and do even more work. So we're going to respond to that audit risk. And then we're going to look at the testing of controls. We're going to test those areas that we think are strong and we might be able to rely on, but you can't rely on them unless you test them to make sure that they are working as designed. And then once we get the results of those test of controls, we then alter and we adjust and we identify the substantive dollar balance testing we're going to do, the nature, the extent, and the timing of it. Once we've completed all the testing, we then make sure about subsequent events, those that are recognizable because they give clarity back to the period end, and those that are only footnotes or non-recognizable, but they are footnotes because they're just information that the user would want to know. We then make sure we get management's representation letter. We then evaluate all of the audit results. And we usually use a standard called the experienced auditor standard, which means another, say, partner who's experienced in that industry but had nothing to do with our audit could review the work papers by themselves and be able to determine the nature, the extent, and timing of the work that was done, who did the work, and the conclusions that were reached. And then finally, we want to make sure that we've met the quality control standards that we typically have within our firm and within our industry. Once we've concluded that, now we're into the chapter that we're learning about. We do our audit report. And of course, we determine if there is a material misstatement, we're going to issue an except for, or if there's a material problem on the audit side, it's still going to be an except for. If it's material and pervasive GAAP problem, it's an adverse. Or on the audit side, it would be a disclaimer. And of course, we always consider the fact that if these statements are false, fraudulent, deceptive, or misleading, we may have to withdraw from the engagement. And then we look at other reporting considerations that may apply, such as whether or not these financial statements are in a different method of accounting, like cash. We also want to look at, is there a need for an other matters or an emphasis of matters paragraph? So all of that is part of the process. Our focus in Chapter 1 is really exclusively on that last step, the reporting standards. So we're now ready to try some additional work from this area.